Hey, Matt the Mortgage Guy here. Today I'm recording a video, how much home is your rent worth? And in this video, I'm going to go over this cool new tool. I'm so excited about it that I don't even have it on my website yet. But by the time I get this video out, I plan to have it embedded, a tool that you're going to be able to use to calculate based on how much rent you're paying and some other factors like how much you have to put down, what that equates to on the buy side. You're gonna be able to interact with this tool as well with how much current debt you have, how much you have to put down, and be able to kind of figure out how much you'll qualify for. So I think this is really neat. And in a time like 2020 where things feel really expensive and people think that the market is tough, I can tell you that affordability is actually near all-time highs because of the fact that rates are so low. Part of the problem is there's no homes to be had. There's low inventory, but that's besides the point. So let's dig in. I'm excited to show you this tool. And if you have any questions, reach out to me after. As always, please like, comment, subscribe if you enjoy straightforward mortgage, real estate, investing, life, business content. This is what you're going to get on this channel. So enough blabbing. Let's get into it. Here we go. You are going to go, and this is going to be embedded on my website. I'll have a link for this down below. And you're just going to input some data. You're going to look, and if you're in California where I'm at, this monthly rent number is going to be crazy. If you're in the Bay Area and some stuff, we're talking about like $4,500 a month rent. But I'm going to go with Sacramento where I'm at. I would say the average 2 or 3 bedroom is somewhere in the $2,400 range. And I have some data from a bunch of people I've talked to, and so that's fairly accurate. If you're in another state, or even if you're in another part of California where it's cheaper, put in whatever that monthly rent is. Interest rate, you could probably do better. Depending on your credit score, it's going to be higher or lower. The average is probably 3%, so just put in 3%. This is a cool part of the tool. You put in your state, and it's going to give you what the real estate taxes are. It's gonna figure that out. It's California, 1.25% is about what it is. I wonder what the factor is they have for homeowners. That seems a little bit high, but we'll leave it alone. 30-year term. Go down here to step 2, and you can put in, if you're a first-time buyer and you're putting down 3%, if you're putting down 3.5%, putting down 5%, whatever that is, whatever you have to put down, put that in here. It's going to help you kind of figure out how much home you can buy, because you'll see in the next step you're going to put some data in there on how much debt you have. So let's say you're putting 5% down. See, this whole time it's kind of adjusting things for how much your max purchase price is going to be, because a $2,400 a month rent, it says the purchase equivalent was $476, but I think what I just read there was that's talking about a 10% down payment. If you're putting down 5%, then your max purchase price is $434. Let's see what happens if we put in that you've got current debts and stuff. I would leave this qualifying ratio at 40%. Both conventional and FHA are going to allow you to go higher, but let's be honest, let's just not be house poor. I think that's something that is a good idea. Okay, $350 a month car payment, $200 a month in student loans, $100 a month in credit cards. What'd I say? 350, 200, and 100? Whatever I said, let's call it 650 total in monthly debts. Keeping your ratios under 40%, what this is saying is you're going to have to make $91,500 to qualify. If you had less debt, $550 a month, be less income to qualify. If the ratios could go a little higher, which they honestly can, but don't go too high, this will let you go to 50. Don't go to 50. Keep it at 45. To be safe, let's be conservative. So that tells you what annual income you're going to need to qualify. I think this is a pretty cool tool, because then you go, you know what? What if I got 10% down? What if I got a gift? Now I can buy up to this amount. Oh, and it's calculating that $2,400 payment. It's having you match what your rent is. You're buying up to $476 with 10% down. If you put 5% down, you're buying up to $434, and your payment is $2,400. honestly, based on your credit score, this mortgage insurance payment is going to be less, way less. With the lenders I'm working with, way less. So this might be even more, but this gives you a good idea, gives you a good general feel for how much you're going to qualify for, how this $2,400 a month translates to a mortgage that's going to have about that same payment. Here's some good news. $2,400 a month, fixed rate mortgage does not change. If you're living in California, your rent is $2,500 next year, $2,550 the year after, $2,650 the year after that. In 7 years, your rent's like $3,100 on that same house. Maybe rents don't continue to go up, but I don't know. I wouldn't bank on it. Want to learn more? Heck yeah, I do. Oh, put in my name. Matt the Mortgage Guy is going to reach out to me. All right, cool. If you have any questions at all, please feel free to reach out. I'm going to put the interactive link that's on my website, which is going to be on my website when I post this video. As always, just trying to do all I can to help educate folks and give you some stuff that'll be of value to you. So if you have further questions, matt@mattthemortgageguy.com. Licensed in California can help you there. If you're out of state, I'm happy to send you a referral to somebody who's in another state, or go to findamortgagebroker.com. Thanks. Have a good day.